Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Today we're breaking down the difference between a warrant and a check, because if you've ever gotten a tax refund from the state, you might have looked at it and thought, this looks like a check, but it says warrant. What's the deal? They look almost identical, but they function in fundamentally different ways. The single biggest difference comes down to who is being ordered to pay the money. When you write a personal check, you are the drawer, and you are ordering your bank to pay someone from your account. The check is drawn on a financial institution, the bank. A warrant, on the other hand, is drawn on the funds of the entity that issued it. So, when a state government sends you a tax refund warrant, the state's accounting department is ordering the state's own treasurer to pay you. It's an internal order to pay from their own treasury, not an order to a separate bank. This leads to the second key difference: who issues them. Checks are used by almost everyone: individuals, small businesses, large corporations. Warrants are almost exclusively used by government entities like states, counties, cities, and school districts. It's their way of managing their own cash flow and authorizing payments from their treasury. Now, here's a crucial distinction that affects you when you try to cash one. A check is what's called a negotiable instrument that is payable on demand. This means if the funds are in the account, the bank is obligated to pay it right then and there. A warrant is more like a promise to pay. It's an order for the treasurer to pay you, but only when the funds are actually available in that specific government account. If the government is having a slow month with tax revenue, there's a theoretical, though rare, possibility that the funds might not be there the moment you try to cash it. So, what does this mean for you in practice? For the most part, you can treat a warrant just like a check. You can deposit it into your bank account, and your bank will handle the process of collecting the money from the government entity's treasury. Sometimes you might be able to cash it at a specific bank that partners with that government agency. The process might take a day or two longer than a standard check because it's not going through the typical bank-to-bank clearing system. To recap, a check is an order to a bank to pay, while a warrant is an order to the issuer's own treasurer to pay. Checks are used by everyone, while warrants are almost always from the government. And finally, a check is payable on demand from a bank account, whereas a warrant is a promise to pay from the issuer's own funds when they are available. It's a subtle but important difference in how your money gets from them to you. Thank you so much for watching. If this video helped clear things up for you, please hit that like button. It really helps the channel out. And for more simple explanations of confusing